Samantha, thank you again for so much wisdom and experience to sharing with our audience. I'm very sure there is so much information that people will need to start taking notes. But you're so inspirational. Let's give them more stuff in topics of personal business loans. What the banks are looking for, what are you experiencing in real life, and what is the difference?
Yeah, great question. So I do work with a lot of clients who either are looking to start a business or they have a business and they say, help me, I can't get approved for anything under my business. And lo and behold, we check their personal credit. And again, their personal credit's not great. So we are not...
So personal credit affecting their business.
Yes. Now, before there were situations where you can get approved for business loans just under your EIN number. That option might still be there, but it's really for very seasoned, businesses
owners.
That are making the income. But for the most part, when you're trying to apply for something these days, I would say that they're always going to check your personal credit. The reason why is if you have an LLC and you're the only member, the bank needs to trust that you are good with your personal finances for them to give you something under the business. And so more and more, if you apply for a business credit card, they will always check your personal, and they need to make sure that you are in good standing. So everything starts with the personal. That is going to be the most important thing to work on in the beginning. But again, then once we try to work on, getting a client approved for business funds, that profile also needs to be built. So just like you have a credit report profile under your personal credit, you also need to work on establishing one under the business. We do see now more and more banks, when you apply for a loan, they're checking an actual business score. They're checking the reports, and they'll come back and say, we have this reporting model, and I pull the number, and there is absolutely no business credit for this client. The personal score is very strong, but they don't have business credit. So I'm sorry, we're going to deny the loan. So we're seeing that a lot. And clients, they're getting confused because in the past, they weren't necessarily looking for that. But now they want to see that, okay, if you're applying for a $100,000 loan from the bank, that you have proof that you've been able to take out credit cards before, or maybe smaller loans, and make the payments on it. So we do have to build up both profiles these days and have a client looking great on paper across everything.
When one, let's say, is trying to apply for either a business loan or a personal loan, and let's say you have a son who needs co-signing on new mortgage, new car, what's your recommendation for co-signing avenues?
Okay, co-signing is difficult. I don't ever recommend it. And the reason why is when I am... Again, a lot of what I do with my clients is planning and strategy. But if you co-sign on behalf of somebody else, in the event that person ever misses a payment, you are just as liable. That person can go and fix up their credit report, but that specific account, it does not mean yours gets fixed. You yourself have to go and try to rectify the issue. And so there's a lot of difficulty there. I don't recommend it. And also, let's say it's a husband and wife situation. I've seen people co-sign everything together. And listen, life happens. There are going to be situations where, let's say you lose a job, something. If you're co-signed with everything, it gets difficult because if one person is going to have to take the hit, miss payments, at least you can survive off of the other partner's credit. But when all of the accounts are intermingled like that, you have two people now who can't support a family with having good credit. So I think co-signing for personal reasons is not great. For business, even more so, because you don't want to have additional liabilities come up that you're not responsible for, and it starts impacting your ability to get approved for a business loan or a business credit card or anything like that. So I never, ever recommend co-signing if you can get away with it. So if I see something that's co-signed, or if I have a client that says I want to co-sign, I say, hey, why don't you just have that person come and fix up their credit so they can qualify on their own? So we don't have a situation where we're co-signing for everybody else.
Well, this is another reason why sometimes when we sell homes, husband wants to put the house only on his name because the wife wants to do something else down the road. So I personally feel this is always best avenue if one can qualify on their own.
Correct.
But how do you feel about people, let's say, during the process of, let's say they're building their personal credit, they're building their business. How do you feel about, let's say, going and during the process of, let's say you're in the process of buying a house.
Yeah.
And right before the closing, they end up going and buying furniture. Or they're going and they're buying a new car.
Yeah, no.
And I always joke around and I tell people, I'm putting you on financial diet. You're literally not allowed to spend your credit cards until we close.
Yeah.
So I did have a case in my past experience where the deal died, not with me, with another broker, where they were in the contract, they got approved for a loan.
Okay.
And right before the closing, the buyer went and got excited, and they spent over $30,000 worth of furniture.
Oh my gosh.
They opened up a new credit with Raymond and Flanagan.
Yep.
$30,000 order of furniture. The next day, the closing was supposed to happen, or maybe a few days before that. And it showed up right before the closing on the credit report. So this was a deal breaker right there.
Yeah.
And the deal just died. And the client approached me and I knew the whole story.
Okay.
But what's your experience in such scenarios?
Yeah, I mean, at the end of the day, especially if you're a business owner, there are expenses that you're going to have to take on. But if you are working with someone and you're able to strategize where that debt goes under, there are a lot of instances where we can save, let's say, a mortgage deal from dying. So, for example, in that situation, let's say they were a business owner. They probably got let's say in this instance, they got qualified for the mortgage using, all of their tax returns, all of that. They might be making money through their business, but again, they're checking the personal income that they receive and they're checking the personal credit report. Now, in another world, let's say that person through their business, they got approved for a business credit card with a $50,000 credit limit, and they put the balance under the business. Now, if you're working with the right business creditor as well, that debt might not have shown up on the personal credit report, right? So let's say you got approved for a Chase credit card for $50,000. You could put that balance on there and it wouldn't show up there, right? Now, again, not every business credit card is like that. Some of them do show up on the personal report. So that's where I would coach you and say, hey, apply here or apply there, kind of come up with a plan for you. But yeah, you're able to kind of maneuver those situations a bit better because you have the flexibility of having a business. Same thing, I see it all the time with auto loans, right? So as you know, it's a huge debt that's on your personal credit report. Now, again, let's say the client actually uses a vehicle for their business. Let's say this person has a construction company and they have a truck under their personal name, but they drive it every day to work. They use it to carry equipment, do deliveries, all of that. Now, they might have personally financed it, but if all of the payments for the vehicle were made through the business for 12 months and documented, that doesn't count in your debt to income ratio. So there, again, you have the flexibility sometimes to maneuver situations with having a business, but we still have to put the plan in place and we still have to have an idea of how to structure it. That's when we come into play. We work with our clients, come up with a strategy. If they say, I'm going to buy a house in 6 months, I say, well, maybe make it 12 because we have to do X, Y, and Z and make it work.
Do you have any business owners that you do business with that have, let's say, some solid businesses like construction company?
Yep.
Do you have this type of clients that have enormous amount of credit cards?
Yeah, I do. I mean, I've seen it both ways, right?
And how does it affect their credit?
Right. So I have one client in particular that I can think of right now that I'm still working with where they did not build up their business credit at all. So he has a significant construction business. He deposits probably $4 million a year into his business account. Not one business credit card, not one line of credit, nothing. So he is running this huge company and he puts everything under his personal credit cards. Now, the difficulty is he never had good personal credit. So right now he has probably 20 individual personal credit cards. All of the limits are so small. He has $500 here. He has another $500 Home Depot card. He has a $700 TD Bank card. He has a $300 PayPal card. it just doesn't work, because if you spend, again, the utilization that we talked about before, if you put a balance of $400 on the Home Depot card with the $500 limit,
then you're maxing out.
You're maxing it out. And I would say majority of the time he's maxed out on these cards across 20 cards because he's running a massive business. So for him, if he has a client and it's $1 million job and that client doesn't pay him, he's stuck with having really, really bad credit. So he's consistently just had low credit score because of the utilization. So I've been able to work with him, manage things, doing certain pay downs, all of that, where eventually we got him approved for higher limit cards. And that helped alleviate the stress. He got approved for that. He ended up getting approved for a line of credit under his business, and got approved for some business credit cards. So there is strategy involved in what we're doing, but you want to get to the point where your personal credit, it's like a storefront, a beautiful display. You go in there to just dust it every now and then, but you have like lines of credit cards, under business entities that you can leverage, and your personal credit stays the same. You don't touch it. You don't max out all of your accounts, and it stays really strong and healthy so you can continue getting approved for what you need.
Do you recommend opening or closing credit cards, and how often?
Yeah, good question. So on the personal side, I don't recommend just closing an account if you don't have to. Again, it depends on the scenario, but I've seen a lot of times where people say, oh, that retail card I've had since 2006, I don't use it. I'm just going to close it.
JCPenney?
Yeah, JCPenney. I'm going to close it. I say, no. That's your oldest credit card. Do not close it yourself. If you have good payment history on it, keep that card. And they say, what? I say, yeah, just go spend like $5 on the card just to keep it active, but keep that card. If there isn't a reason to close it, don't do it early, because that specific card might actually be holding up the account history on your credit profile, and it might actually be helping your score a lot. So yeah, maybe just ask a consultant first before you make that decision.
Well, speaking of consultant, Samantha, talk about your services a little bit more. What type of value do you provide to your clients?
Yeah, I think for value, again, we have experience dealing with so many different scenarios that we've probably had a client in your situation before, going through a similar issue. And so for us, I don't view us as just a credit repair company. I feel like we are more of a coach, right? Credit coach, financial coach, because again, we're taking people from where they are here. I'm able to give them advice on how to maybe structure their business, or how to apply for a home, or get into real estate investing. And so for us, we really just love working one-on-one with our individual clients. We work with families, referral-based business. And so, that's what we enjoy doing. We do have partners in almost every financial sector. So we have people, if I look at a tax return and I say you don't qualify for this mortgage because your accountant didn't factor in depreciation and rental income on the property and all of this other stuff, I'm going to tell you to fix it, right? So we have partners that I can then send you to. I don't do bankruptcy myself, but if I know that that is the best option for you, I will send you to a good bankruptcy attorney, right? If you say, hey, my business is looking good, my business score is there, I say, great. Work with so-and-so at this bank. She's amazing. She'll take care of you. She'll help you get approved for what you need. And so I really view our company as like a family. It's a community. Obviously, we are a family-based business. So anyone who comes into our office, they know myself. They'll know my mom. So we try to keep it as intimate as possible. But we have a family of incredible professionals that are able to help you on your journey.
That's amazing. That's amazing. So do you guys charge like monthly fees? Is it per job fee? How does it work?
Yeah, I would say it's specific to the individual. We do have packages that can accommodate both. So if you say, oh my gosh, I don't have a budget, but I have these things I want to fix on my credit, great, we have a monthly option for you. If you come to me and you say, I need help with everything, like, can you help me with my settlements? Can you help me build my score? Can you help me with this and that? I say, okay, maybe we'll do more of a retainer approach where I work with you long term. That cost can vary. It could be, anywhere from $2,500, maybe $3,000. Really just depends on the client and the scope of work. But again, it's going to be based on your situation. So you can always come to us. We'll have a discussion and we'll figure out what's fair for everybody.
What would be one piece of advice you could give a business owner that's beginning a new business?
Yeah, I would say piece of advice for them is, again, focus on your personal credit at all times. Because I've seen more often than not, when it's important for them to secure business financing, they forget about the personal and it kills their deal. So focus on the personal credit. If you need help managing that, just let me know. We can go through that. I would say that's the first thing. And then the second thing is really, have a plan. I have a lot of business clients. I love them to death, but they go into something without even running any numbers. They've never sat down and actually put together a business plan before. So a lot of small business owners, they say, well, I want to start like a beauty company and I want to start like this salon, or I want to, get into construction, but they've never thought about, okay, these are my expenses monthly. This is what I can bring in. And they've never ran the numbers. They've never budgeted. So if you need help with any of that, we will sit with you. We'll come up with a plan. We'll send you to someone who can actually help map all of that out. And we all will work together to help you succeed.
Excellent. What's your hours of operations?
At the office, we're there usually 9 to 5, 9 to 6 every single day, Monday to Friday. A lot of my clients, they have my direct cell phone number, though, so they reach me at all hours. But yeah, we're always available. So if I'm not personally able to answer the phone, we have an incredible team at our office. We have about 10 people that work just in our New York office, and we have another set of people on the West Coast. So you'll always find somebody available to help.
Well, I've heard so many great stories about you, Samantha, that you're rescuing clients right at, I would say, 911 cases, right? Like when, let's say, a mortgage broker applies for a mortgage, something happens in between, nothing that was seen before and, foreseen even during the process.
Yeah.
And then things just come up out of nowhere and then your help is needed.
Yeah.
And I've heard so many stories that you were kind of like really there to rescue the clients and get to the finish line at the last minute. And I just can't really wait for us to start working together more one-on-one and to really help and educate public more on this important topic. Because for me personally, I feel that the more we educate people, the more clients we will get.
Yes.
The more we put out there, the more information that goes out there, the more people know that you exist, what kind of services you provide, and what kind of partners you have behind your back.
Yes.
Right? And the same applies with us. We are the same way. We a very big brokerage, very big team. We do what we need to do. And of course we have personal life behind also.
Yeah.
So in the end of the day, we take it as family. We want to take care of people. We want to help as many people as we can. And in the end, I want to thank you very, very much for joining me today. Again, Samantha, put out your information so everyone knows how to get you.
Yeah, our company, you can find us at creditrepairboss.com. You'll be able to read our Google reviews as well. And if you want to reach out to me individually, my cell phone number is 917-536-2800, and you can contact me there.
Thank you. Thanks, everyone, for watching. We are on our journey to bring more valuable professionals like Samantha. This is just one of the fewer episodes that you watch. There is so much more to come. Please stay tuned, subscribe to our channel, and continue to watch and learn.